Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's talk about what happened once again to Tesla stock, our beautiful Tesla stock just getting pummeled. This feels like every single day, really just cannot catch a break. And yeah, let's just talk about it. Let's figure out, what we can expect moving forward. Obviously a pretty big week this week, but even more next week with Tuesday being earnings day. So option premiums will be absolutely juiced. So selling options into earnings sounds like not a horrible idea. I already started slowly selling some options for next week, but regardless, all that being set aside, let's just jump into a Tesla. Oh, actually, before I do that, if you like the video, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below. If you're interested, for just $2.99 a month. You get access to all my intraday thoughts, posts, updates, options flow on Tesla pretty much, every single day the market is open, the Tesla's trading. And I'm constantly, updating, constantly posting and whatnots for my members, right? Regardless of how good or a bad day it is for the stock. So if you're interested, link below. But jumping into it, Tesla closing the day, yet another day in the red, down 2.7% on the day, 157.11 per share, which compared to the market is obviously a pretty, decent underperformance. Now, this is going to be on the back of yet another downgrade. I believe it was Morgan Stanley or JP Morgan. It was one. I always get those two mixed up. I think the names are literally the same. But one of those two downgraded Tesla even further. And Tesla, of course, did gap down pre-market once again, right? If we go, for instance, that's not what I wanted. If I go down, let's say to the 4-hour chart, we go extended hours, you can see this gap down right here pre-market, right? And then we did pretty much trade within this range. We did drop all the way to as low as about 154, which is a pretty important level, right? I have this, horizontal, if you will, line right here for a obvious reason. So for instance, if I remove this for now, make the chart a little more clear, go back to the daily, right? We can see that this horizontal line is important. Now, there's two things that I want to mention here that are pretty crucial. So first and foremost is, of course, this support, right? The support we've been talking about, and I've been talking about this 150s level for quite some time, right? Do I wish I waited a little bit longer because, part of me thought that maybe we won't see it? Yes, but obviously I did leave plenty of cash to continue selling cash secured puts, right? I have cash secured puts in the 150s. I have cash secured puts in the 140s, right? And I'm willing to buy here. These are the levels, the 150s, especially 140s. I'm very, very willing to buy shares and continue adding, right? Not in a major rush, but nonetheless, the reason this level is important is because you can see, so if we go all the way back here, right, this was all the way back in the 2020, right? A lot of kind of resistance in this area, right? We came up to this area several times and we kept kind of tagging and rejecting, and this, pretty much this low to mid 150s area was a massive area of resistance until we finally broke through it, and we had an absolutely astronomical rally from that, right? On top of that, if we move all the way back here, right, a little bit of resistance here, right, a little bit of support here, a little bit of support here, right? This was the support that, remember, we came all the way down, created this bull flag, and then off of this double bottom, essentially, we had this massive surge, right, massive rally all the way from 150 all the way up to about 300, pretty much a doubling right there, which is pretty incredible. We're back right at it, right? This is why you want to look at these levels. So that's like the first thing I want to mention, right? We're pretty much right at a crucial level. Now, obviously, if we do break below this level, right, this, mid-ish, we'll say 150s, the next level below that is going to be pretty much the mid to low 140s. Why? Well, plain and simply, this is a pretty massive area of trend support, all the way stemming back from this 2020 area back here where Tesla was only $24 per share, right? And then it obviously came down here when Elon was selling, pretty much bounced off of here. This created that trend line, and now that trend line, if you connect the dots, essentially pretty much exists around that mid to low-ish 140s. Really just depends on when we actually potentially come down to it, right? If we come down to it sooner, it'll be low 140s. If we take a lot longer, like another month or so, it'll be around the mid 140s. Really just depends on that time frame. But nonetheless, another reason I want to bring up this, mid to low 150s level that's pretty crucial is going to be this. So we kind of already arguably filled this fair value gap right here, but we're kind of coming back down to refill, potentially maybe even further fill this fair value gap all the way back here. It's actually this massive gap that was left open, which, by the way, the literal gap fill, in my opinion, is about 144. So that is still a possibility to fill, but some people consider these gaps filled when even you kind of like partially get into them. So for instance, some people may argue that it's already been filled from this situation here, or maybe we can go a little bit lower, right, to fill the gap truly, maybe like just briefly enter the 140s, for instance, right? But that is still another potential, major thing that can be acting as a support, because usually when you come back down into these gap fills, usually they act as a support, or on the flip side, if you go up into gap fills or fair value gaps, they usually act as a resistance, right? In this case, it's a green fair value gap, so naturally it acts as well a support. And we'll see if that actually ends up being the case here or not. I will go over some options flow very quickly. There's some, interesting things to note. But that's the main thing I'm looking at now, right? Now, if we go and zoom in a little bit to this price action over here, there's two things a couple of things I want to mention. The first and foremost is going to be, let me go ahead and fix this. My MACD indicator is messed up a little bit here. There we go, right? Is unfortunately, we did cross back down to the downside on the MACD. That's not really ideal, right? We did cross down to the MACD. It is now once again flipping bearish. That's not really ideal. That is obviously not a good sign for the bulls. And, at the very least, this shows that it may take some time before we truly get the hell out of this area. Let's just say that, earnings would have to be some phenomenal, magical earnings, not necessarily maybe a beat, but potentially like a really damn good guidance. I think if we get damn good guidance from, Elon or whatever, on the earnings call, that would be pretty damn bullish, right? And that I think will bring Tesla finally out of this. But if we don't, and if we get bad guidance or no guidance or, something along the lines of that, or earnings is just another disaster show, expect the 140s next. That's most likely going to happen. But at the moment, we have a doji candle on the daily chart, which, can potentially signal, either indecision or reversal. So I think the quote unquote worst case scenario for now, at least, is we kind of just do nothing until earnings. We just pretty much trade sideways. Like this 150s to 160s range, we just kind of trade sideways until earnings, right? We just kind of zigzag here for now. And then the earnings will dictate if this was just a false breakdown or we do go back to the 140s and maybe go for that true gap fill around the 144 area, right? That is still a possibility, especially with this MACD flipping bearish, who knows, right? But earnings, of course, can obviously flip this around pretty darn quickly. So keep that in mind. But with that being said, let's not forget, things are not looking great, but let's not forget we're still creating bullish divergences. This is a pretty freaking massive bullish divergence at this point. Like this is, it's been here for quite some time, pretty much since the beginning of the year almost, or like the late January of, the beginning of this year, right? We've been constantly making lower lows, right? We made a lower low here, or the actual low here that started that bullish divergence. First time the RSI was oversold for this long or this low in a long time, came back down, set another lower low, set another lower low today. But what has happened in these time frames that we constantly set these lower lows on the chart? Well, this was the initial one, right? And then down here we set a lower low, cool. Higher low on the RSI, another lower low, cool. Another higher low on the RSI. So it is a pretty significant bullish divergence. Like I'm not gonna lie, this is a pretty substantial bullish divergence. Now, obviously, there's nothing to guarantee that it'll play out, right? This can fall apart. For instance, if this RSI, let's say we come down to the 140s and this RSI breaches this kind of 28-ish level that we recently set as, that kind of second higher low on the RSI while we set the lower low on the chart. Like if we ever breach this and the RSI now also sets a fresh lower low, well, that bullish divergence is gone, right? They no longer exist. It's completely trivial now, right? But as it stands right now, it's still very much in play. Will it play out? Nobody knows. But it's a pretty darn good sign, at least for now. And, it really feels like Tesla's really coiled up. Like it really feels like there's a lot of coilage right now on Tesla, a lot of pressure being set in, a lot of pressure just pushing it and keeping it down. And so far it's been successful, but it can take something like a good earnings call, a good guidance, or some kind of catalyst to really, I don't know if that's gonna mess up the audio. I hope not. I just completely smashed my mic there. Go ahead and fix that. I'll have to fix that after. Hopefully the mic doesn't sound too bad. Okay, it sounds like it's fine. Ew, oopsies. But my point is that all it takes is for something like that to really spring this stock back in action. Will it actually happen? Will it take more time for that to actually happen? Will it take maybe as long as the robotaxi unveil? Possibly. But the point is the fact that it does feel like it's coiled and ready to spring. It just needs something. It needs some kind of catalyst to really bring it back into action. And once it does, I'm sure we can all agree, as hard as Tesla can fall, and we've been obviously witnessing that for quite some time now, it can fall pretty substantially and pretty aggressively. It can do the exact same thing to the upside. Just like when it completely collapsed over here, it completely sprung up all the way over here pretty darn aggressively. So we'll see how it plays out, right? But that's another thing to kind of be wary of. Now, the next thing I want to talk about is this. This is where sometimes my issue, like I said before, with trend lines really begins. Right? Trend lines are great. I love trend lines, but there are some caveats with them. And the caveats are as follows, right? So for instance, on the daily, I have this trend line right here, right? This trend line that we, have been following for quite some time, that we had that false breakdown and we arguably now, have broken down below it once again. The issue with this is the fact that on the daily, if I have it drawn like this, yeah, it looks like we broke down. That's not great. However, let's go to the weekly chart. I drew a fresh one on the weekly chart. And if we look at it here in the weekly chart, this one right here, right? The same, pretty much the same one, just, redrawn. You can see it's still touching a lot of these very crucial levels that we did find bounces on, right? Very, very crucial levels. It's touching a lot of these candles. But you can see here on this freshly redrawn weekly one, we are now still technically within it. We technically haven't broke down below it, and we actually bounced right off the bottom, similar to how we did way back here. Pretty much after that, what was this? I think this was the earnings drop, right? I think this was the earnings drop right here. Oh no, this was March. It was well before that. I think this was the earnings drop back here. This was the earnings drop. Never mind, this is way after that. Anyway, but ever since this drop right here, similar to how we came back to the bottom of it, we bounced. Well, we're pretty much doing the same thing again so far, right? So this is the issue with trend lines. Like, they're pretty subjective, right? Because you can draw them many ways to fit a specific narrative or subjective narrative or whatever that you're looking for. So that's important to understand. Now, unfortunately, the weekly chart no longer has the MACD basing. It's now pointing back down. So there is a lot of weakness and a lot of, just bearish momentum really setting in for Tesla stock once again, as if we thought maybe we were finally out of it. Well, we did have essentially a false breakout over here. We couldn't really close the weekly candle above this breakout, and now we're essentially kind of coiled up once again in this potential situation that we find ourselves in. So I really think that for the most part, honestly, if we're lucky, I have a 3-day rule, right? If we break down like this, right, below the 160, for instance, in this case, I have a kind of like a 2-3-day rule where, if we can recapture 160 tomorrow, Thursday, maybe Friday, that's pretty darn good, right? This could potentially be just a false breakdown, right? I have that 3-day rule, but we'll see if that actually happens, right? If it does happen, we'll talk about that and what that can obviously imply for the stock. But assuming it doesn't happen, assuming we, don't break back above 160, tomorrow, the day after, for the most part, I just expect a whole lot of nothing here. Just most likely sideways action and choppiness, if you will, in the 150 range as we await earnings to really decide our next fate as to whether or not we come back down to about the 140s, or we can finally set Tesla free and we can finally have the stock show some signs of life. We'll see how that all plays out. But those are the main things I'm personally eyeballing as of right now. In terms of options flow, you can see Tesla was actually, among the bullish flow here. Not too much, only 15 million, which isn't too crazy, right? But one thing to note is the fact that pretty much a minute before the market closed, there was a call that came in, 167.5 strike for next Friday, which is post earnings, of course, 105K premium. However, with that being said, just after that, there's also another massive put that came in, also for next Friday, 147 strike, 700,000 pretty much in premium. So take it as you will. Another pretty interesting one here came in, right? 105, or you can see puts. A lot of puts came in for 150, but one of them, an outlier, maybe they mistyped, I don't know, because these are all 150s. This is 105. I doubt it, obviously, but 1018, 105 put, 400K premium. That's kind of interesting, right? Another one here, 70 puts coming in for 816, right? 100K premium. They could just be playing the increase in volatility leading up into earnings. Who knows for sure? But, pretty concerning, I guess you can say. So I really think it comes down to earnings, right? I think for the most part, best case scenario, we get back the 160 range. But if we don't, I think we just pretty much consolidate, do nothing until earnings. And then I think that really decides the next, direction of Tesla stock. If we continue breaking downwards to the, 140s, or we continue finally, making our way back up. Now, I do want to make it clear, if we do break 140, if we lose this trend line, if we lose 140, if we lose this gap fill from all the way over here, and we start breaching below 140s, that's not good. At the very least, we're coming back down to the 125s, if not potentially, a bottoming potential situation happening in pretty much close to $100 per share once again. So yeah, let's just hope that doesn't happen, because that will be a lot more pain. A great buying opportunity, but a lot more pain if you're holding shares. So we'll see how that plays out, but that's all I got for today. Pretty painful stuff. We'll see how the market responds. We'll see how Tesla responds. I do think the market looks like it's potentially ready for a bit of a relief here. So we'll see if Tesla can follow through and potentially get its way back above 160. But yeah, it remains to be seen. So thanks for watching. Don't forget, we have a lot of volume above us. So even if we do recapture 160, there's a lot of work to be done to continue upwards. So yeah, a lot of work to be done for Tesla. But with all that being said and done, not something it hasn't done before. But with all that being said and done, thanks for watching. See you tomorrow. Peace.